Washington just shook the markets with a new tariff wave. Here's what happened last week. The U.S. announced 100% tariffs on pharmaceuticals, 50% on cabinets, vanities and furniture, and 25% on heavy trucks, all kicking in October 1st. That puts effective U.S. tariff rates at levels we haven't seen in 80 years. Investors hit the sell button. Institutions flipped to net sellers for the first time in 3 months. Hedge funds dumped another $2 billion after a brutal stretch the week before, and retail investors logged their third straight week of redemptions. Now to company news, Acadia Healthcare jumped nearly 12% in a single day after an activist investor disclosed a 3% stake and pushed for a board refresh. The move signals pressure for governance changes and potential strategic shifts, giving the stock fresh momentum. Pfizer made headlines after announcing it will acquire weight loss drug maker Metsera for about $4.9 billion. The deal expands Pfizer's footprint in obesity and cardiometabolic diseases, and Metsera stock soared 58% on the news. Kenvue, the Johnson & Johnson spinoff behind Tylenol, had the opposite reaction. Shares sank more than 10% after the Department of Health and Human Services suggested a link between acetaminophen use during pregnancy and autism. The agency plans to update warning labels and advise doctors against recommending Tylenol for pregnant women. The company is already facing class action lawsuits on the issue, and an appeals hearing on October 6th could open the floodgates for more cases. With Tylenol generating about $1 billion annually, nearly 10% of Kenvue's revenue, the risk to earnings power is real if consumer trust collapses. Meanwhile, a U.S. government shutdown risk escalated. The White House threatened mass federal firings if no budget deal is reached by October 1st. Democrats countered by demanding healthcare subsidies for illegal immigrants, raising the odds of a drawn-out standoff. Inflation, at least, stayed predictable. Core PCE landed at 2.9% year-over-year, headline at 2.7%. Both were steady enough to keep 2 more Fed cuts this year on the table. Consumers kept spending too, with August personal spending up 0.6%, while jobless claims came in below expectations. Markets finally steadied into Friday. The S&P gained 0.6%, the Nasdaq added 0.4%, and the Dow rose 300 points, snapping a 3-day losing streak. Safe havens kept shining. Gold held near record highs, silver and miners climbed with it, and crypto stumbled. Bitcoin down 2%, Ethereum off 3.5%, as traders bet the Fed won't cut as much as expected. Under the hood, sectors told the story. Energy led with a surge of nearly 4%, powered by big names like Halliburton up 11.5%, EQT up almost 10%, Texas Pacific Land up 9%, and Devon Energy just behind. Utilities followed, with XL Energy spiking almost 10%, Nextery up nearly 7%, and Sempra and NiSource also posting solid gains. Real estate was barely positive, but most other sectors fell. Materials down over 2%, consumer staples off almost 2%, healthcare losing 1.3%, and technology flat. So the week wrapped with Washington policy driving the headlines, safe havens drawing demand, and energy keeping the markets from sliding deeper. With tariffs set to bite October 1st and a shutdown fight brewing, October is shaping up to be volatile. Want weekly recaps like this and a heads up on what could move markets next? Click the link below and subscribe to the Level Fields newsletter. It's fast, free, and built for investors who don't want to miss a beat. Follow and subscribe for more. Level Fields Elite Investing, Effortless AI.